Imagine you have a neighbor named Mr. Watanabe. He is a very quiet, very generous man. He has a garage full of the most amazing toys. And for 30 years, he has had the same offer for everyone in the neighborhood. You can borrow any toy you want for $0. Just bring it back eventually. Now imagine you're the smartest kid on the block. You realize that while Mr. Watanabe is giving away toys for free, the kids in the next town over are desperate for toys. In fact, they're willing to pay $5 a week just to play with a single action figure. So, you hatch a plan. You go to Mr. Watanabe's garage, borrow 100 toys for $0, and immediately run to the next town and rent them out for $5 each. By the end of the week, you've made $500. And what did it cost you? Nothing. You didn't use your own money. You didn't even use your own toys. You found a magic money machine. As long as Mr. Watanabe keeps his garage door open and the kids in the next town keep paying their rent, you are set for life. You feel like a genius. You feel invincible. But then one Tuesday afternoon, Mr. Watanabe walks out of his house, looks at the line of people at his garage, and says, "Actually, from now on, it's going to cost $1 to borrow a toy." In that 1 second, your entire life flashes before your eyes. You don't have $100 to pay Mr. Watanabe. You already spent the rent money on a new bike. To get the cash, you have to run to the next town, snatch the toys back from the kids who are playing with them, and sell them as fast as possible for whatever price you can get. But you aren't the only one. Every other genius in the neighborhood is doing the exact same thing at the exact same time. Welcome to the yen carry trade. This isn't a story about toys in a garage. This is the story of a $20 trillion bet that the entire global financial system has been making for decades. It is a story of how a tiny change in a quiet office in Tokyo can cause the stock markets in New York, London, and Seoul to go into a total, screaming meltdown. To understand why the world went crazy for the Japanese yen, we have to look at something called the lost decade. Back in the late 1980s, Japan was the hottest economy on Earth. Their real estate was so expensive that the land underneath the Emperor's Palace in Tokyo was worth more than the entire state of California. But then the bubble popped. Hard. The Japanese economy didn't just slow down, it froze. For 30 years, while the rest of the world was growing, Japan was stuck. People stopped spending. Prices stopped rising. To try and wake the economy up, the Bank of Japan did something radical. They lowered interest rates to 0. And then they went even further. They lowered them to negative rates. They were basically paying people to take their money. In the world of finance, interest is the cost of money. If interest is 0, money is free. Imagine you're a giant hedge fund manager in New York. You look at Japan and see free money. Then you look at the United States, where the government is paying 5% interest on bonds, and tech stocks like Nvidia are growing 100% a year. The math is so simple, a 5-year-old could do it. You borrow $1 billion worth of Japanese yen at 0% interest. You immediately sell that yen and buy US dollars. Then you use those dollars to buy Nvidia stock or high-paying bonds. You are now making a massive profit using money that isn't yours. This is the carry trade. You carry the money from a place where it's cheap to a place where it's expensive. For years, this was the ultimate infinite money glitch. It was so profitable and so easy that everyone did it. Banks, pension funds, billionaires, and even regular traders. They all piled into the same trade, assuming that Japan would stay stuck forever and the yen would always be cheap. But here is the first twist. There was a hidden monster in the room that nobody wanted to talk about. The exchange rate. See, when you borrow money in yen, you eventually have to pay it back in yen. If you borrowed 100 yen, when 1 yen was worth $1, you owe $100. But if the yen gets stronger, if suddenly 1 yen is worth $2, you now owe $200. Your debt just doubled, even though you didn't borrow a single extra cent. For a long time, the yen was very weak because everyone was selling it to buy dollars. This made the carry trade even more profitable. Not only were you getting free money, but the money you owed was actually getting cheaper to pay back. It was a win-win. It was a party that never ended. By 2024, the size of this trade had become monstrous. Some experts estimate there was up to $20 trillion tied up in this one single bet. To put that in perspective, that is almost the size of the entire US economy. The global market wasn't just using the yen, it was addicted to it. Every time you saw a tech stock like Tesla or Apple hit a new all-time high, there was a good chance that some of the fuel for that rise was cheap money borrowed from a quiet bank in Tokyo. The world was leaning on a single tiny pillar, and that pillar was the promise that the Bank of Japan would never, ever raise interest rates. But then the second twist arrived. Inflation showed up. Even in quiet, frozen Japan, the price of noodles and gas started going up. The Bank of Japan realized they couldn't keep the music free forever. In July 2024, they did the unthinkable. They raised interest rates by a tiny microscopic amount, 0.25%. In a normal world, 0.25% is nothing. It's the price of a gumdrop. But in the world of $20 trillion of debt, it was a nuclear bomb. This leads us to the third twist, the margin call from hell. The moment the Bank of Japan raised that rate, the magic money machine broke. Suddenly, the yen started getting stronger. Fast. Within days, it jumped in value. Remember our toy analogy? This was Mr. Watanabe telling everyone that the free toys now cost $1, and the toys were suddenly worth twice as much as before. Panic hit the market like a lightning bolt. If you're a hedge fund manager and you see the yen rising, you realize that your billion-dollar debt is getting more expensive every second. You have to pay it back now before it gets even worse. But to pay back the yen, you need cash. And where do you get that cash? You sell your winners. You sell your Nvidia. You sell your Apple. You sell your Bitcoin. You sell your gold. On August 5th, 2024, the world watched in horror as the Japanese stock market, the Nikkei, suffered its biggest one-day drop in history. It fell 12% in a single afternoon. It was worse than the Black Monday crash of 1987. But the crash didn't stay in Tokyo. It raced across the ocean to New York. Because everyone was using the same free money to buy the same tech stocks, everyone had to sell at the exact same time. This is what's called a margin call. It's when the bank calls you and says, the value of your bet has dropped too low. Give us our money back right now, or we will sell everything you own. This created a feedback loop of doom. People sold stocks to pay back yen, which made the yen stronger, which forced more people to sell stocks, which made the yen even stronger. It was a financial whirlpool, sucking the world's wealth down the drain in a matter of hours. Billions of dollars in market value vanished before lunch. The infinite money glitch had turned into an infinite loss glitch. Here is the fourth twist, the central bank trap. You might think, okay, the market crashed, it was bad, but it's over now, right? Wrong. The carry trade is too big to fail, but it's also too big to fix. The Bank of Japan is now in a terrifying trap. If they raise interest rates again to fight inflation, they risk triggering another global collapse. They could literally break the world's banking system. But if they keep interest rates at zero to protect the markets, the yen will keep getting weaker, prices in Japan will keep rising, and the Japanese people will suffer. They are stuck between a rock and a very, very hard place. And it's not just Japan. The US Federal Reserve is trapped too. If the US lowers its interest rates to help its own economy, it makes the US dollar weaker. If the dollar gets weaker while the yen gets stronger, the carry trade unwinds even faster. It's like trying to stop a forest fire by throwing gasoline on one side and water on the other. We have built a global economy that is so interconnected and so dependent on free money that we have forgotten how to function without it. We are like a person who has been living on credit cards for 30 years. We have a big house, a fast car, and expensive clothes, but we don't actually own any of it. We are just carrying the debt from one month to the next. And the man in the quiet house next door, Mr. Watanabe, just realized he wants his toys back. This brings us to our final twist, the lesson of the herd. The ultimate lesson of the $100 billion currency bet is that in finance, there is no such thing as a sure thing. Whenever you hear someone say they've found a way to make free money with zero risk, run away as fast as you can, because what they've actually found is a way to hide the risk under a giant rug. For 30 years, the world hid its risk in the Japanese yen. We thought we could borrow from the future without ever having to pay it back. But the electronic herd, the millions of traders and algorithms that run the world, is a nervous creature. It moves in a split second. It doesn't care about your retirement fund or the stability of a nation. It only cares about the exit door. And when $20 trillion tries to fit through a door built for one person, people get crushed. Today, the markets have calmed down a bit, but the debt is still there. The carry trade hasn't disappeared. It's just waiting. Somewhere in a computer in Tokyo or a skyscraper in New York, the next loop is beginning. Finance isn't just about spreadsheets and math. It's about human psychology. It's about the greed that makes us borrow toys we can't afford, and the terror that makes us sell them at any price when the bill comes due. The quiet neighbor is still there. His garage door is still open. But now, the whole world knows that the toys aren't free. And the next time Mr. Watanabe decides to change the rules, we might not be so lucky. The magic money machine is a ghost. It looks real when the sun is shining, but the moment the clouds roll in, it vanishes, leaving us standing in the rain, wondering where all the free money went. So, the next time you see the stock market jump for no reason, or you hear a politician talk about stable growth, just remember Mr. Watanabe's garage. Remember the smoothie made of debt and the blender that is Wall Street. In the end, the only thing that is truly free in this world is the lesson you learn after you lose everything. And for the global economy, the lesson of the Japanese carry trade was a very, very expensive one. Finance is a game played by giants, but it's the rest of us who feel the ground shake when they fall. Stay curious, stay cautious, and never trust a neighbor who offers you free toys forever. Because eventually, everyone wants to be paid.